All right, we're talking to Jeremy Mehrhoff and Frank Wright of Mehrhoff and Wright CPA firm. Gentlemen, welcome.
Good morning, Derek.
Hey there.
So, first of all, catchy name. Not sure how you came up with that one. Like it.
Oh, yeah. We just thought it would be a good name to have.
Yeah.
Since we specialize in condominium, HOAs, cooperatives, all common interest realty associations. That's all we work with.
Yeah. Did you guys flip a coin to see whose name went first on the letterhead?
No, actually, Frank suggested it be that way. So
yeah, it's got a good ring to it. So why don't you guys just give a little bit of background on yourselves individually, how you got into the whole accounting world, and then how you ended up kind of specializing or focusing in on the association ecosystem.
All right. Well, I'm Frank Wright, CPA. Jeremy and I actually met working at a prior firm together. That prior firm as well, a different region of the country. They specialize in HOAs and condos as well.
Okay.
So we kind of both got introduced early to doing accounting for HOAs and condos and gained expertise that way. And, we figured we could bring that same expertise to Florida when we started our own firm and came out here to get started.
So why Florida? Did you have relatives here, or did you just, I mean, obviously there's a huge need for dealing with associations in Florida with the number of associations we have.
For me, being from Minnesota originally, the weather is the biggest thing. But, it's a beautiful state, and definitely there's definitely a lot of HOAs and condos that need help with their accounting and audit services down.
Yeah, I think I told you guys, I'm from Wisconsin. I didn't know anything about HOAs, condos, not a ton of them up there. Down here, it's hard to find a place that's not in an association for sure.
Absolutely.
So Jeremy, you're from Minnesota too?
Yes, I am. And I've been doing this for 17 years, like Frank said, with another firm. And then before we started our own firm. So Florida was the spot to go.
Yeah.
So it's been good.
Yeah. And Southwest Florida, especially, the buildup down here is amazing. Number of associations that just keep coming online. I mean, I'm sure it's all around the state, but I mean, during COVID, there was such an explosion. Sure. Everybody wanted to be here for sure.
Yep. And we do service the entire state. So we got a office up in Destin, and we also have one in Bonita Springs.
Okay. Oh, Destin's nice. My son used to live up in that area. That's a nice area for sure. So when people think of accounting and they think of associations, there's a couple, and again, I say it all the time, but my background, property management, not what I'm doing right now, but there's the bookkeeping side to accounting, and then there's the tax side and the audits and all of that. So where do you guys fall in with this?
So for us, we do audit and tax for our side of it. So your bookkeeping service, most of the time your management company will handle that. If you're a self-managed association, a self-managed tower with your own on-site manager, you may have your own CPA firm doing the books for you. But for us, we don't do bookkeeping. We do audits and tax returns. So, the bookkeeper, they do your, present your monthly financials, the day-to-day in and out kind of thing. What we do as auditors is we kind of come in at the end of the year and check over the work, make sure everything's kosher, make sure the money is still all in your bank account.
Always a nice thing at the end of the day.
Yep.
I know in this particular area, it was a few years ago, there was a pretty well-known case of a management company not making sure that all of the money was in the accounts.
Sure.
That, boy, you know what? I haven't checked in on that in a while. At the time, I remember, I think this management company, and again, these are one-offs. Most management companies are amazing, solid institutions. But this particular couple, it was a small management company, a couple, I want to say it was like $10 million they ended up embezzling from these associations and then ran off to another country.
Sure.
I have to look into that. Now, do you know the case I'm talking about?
I don't know about the Florida one, but there was one, I think, in Florida down in the Miami area, wasn't it?
Miami seems to be a hot spot sometimes for things like that.
Yeah. Yep. And then I know there's a case like that up in Minnesota too. So I mean, that's why the statutes, they come in and they require these to be done, but whether or not the board wants it, like it's required by state statute. So in Florida now, depending on your level of revenue that your association takes in, if you have over 500,000, you're required to have an audit at least every other year. And this is just started January 1st, the new law where you can't waive it for more than 1 year. If you're between 300 and 5,000, you're supposed to have a review. And then from 150 to 300, have a compilation performed by an independent like CPA.
So explain the difference between an audit and a compilation.
Okay, so there are 3 levels of service that we provide with that. Our highest level of service is going to be our audit. So with an audit, what we do is we get your financial records and we cross-check those against actual documents, records. We go through invoices, bank statements, make sure your financials are recorded properly. We also check for errors, mistakes, make sure your accounts are classified correctly. With the review, that's the next level of service. It's similar to an audit. We do the same kind of thing. It's just we do a little bit less. We don't look at as many records. There's a few procedures that we don't do. So the review is kind of like a light scale audit, and it's a little more affordable. And then the compilation is different from the other 2 services because we don't actually give you any real assurance with it. We don't go in and double check your bank accounts. We don't really check invoices. All we do with a compilation is we take the financials from your management company and we make sure everything's classified correctly. We look for major mistakes. But at the end of the day, there isn't a whole lot of checking third-party documents, the compilation. So you don't get as much assurance, but it's really designed for smaller properties that don't have to worry too much about fraud or major errors and major mistakes.
So I always have recommended to any boards that I talk to that the board themselves needs to have a signer on the account and needs to have access on a regular basis to pull their own statements. Just curious
Yes,
on that.
absolutely. And one thing we do with the audit is we take a look at, does the board have access to the bank? Are they a signer on the account? It's called internal controls. We look for weaknesses where fraud might occur. And if we find anything major like that, where the board does not have access to the accounts, we recommend corrective action for that.
Okay, that's great. Because there's always, when you're in the day-to-day weeds of running an association, being on the board, you don't necessarily think about things like that. That's why it's great to have experts like you guys come in and say, okay, yeah, I see a weak spot. So on the tax side, what does that all entail? Obviously, every board, nonprofit, but still is liable for coming up with their taxes every year. How involved is that?
So really, associations are in a unique situation when it comes to tax returns. A lot of tax professionals I know, they'll take a look at an association tax return and, they've been doing taxes for 20 years. They've never seen anything like an association tax return and don't know where to start with it. They're very unique how they're treated tax-wise. So they're a nonprofit. They're also tax exempt, but they still pay tax on some income. So it can be a little confusing if you don't go to a tax professional who specializes in condos and HOAs. So really the key points for that is, yes, all associations are required to file tax returns every year. I hear a lot from board members, oh, I thought we were a nonprofit. Why do we have to file tax returns? All associations are required to file tax returns every year. Now, most of the income is tax-free. Your assessments, insurance claim income, special assessments, reserve assessments, it's all tax-free. What does get taxed? Interest, investment income. If the association has a rental unit that they rent out for guests, that's taxable. If you have laundry facilities, that's taxable. Amenity fees, that's taxable. Now, the good thing is 99% of the time, we're able to deduct certain income. There's certain types of income, which again, it's all kind of industry standard stuff. So you would need to go to a firm that specializes with condos and HOAs for that. But 99% of the time with the deductions that we can take, it's, the associations we do tax prep for, they owe nothing. There are a few situations where I've seen, which I'm sure most associations would kill to be in a situation where they have $200,000 in investment gain income during the year. But there are a few situations like that where, yes, there's nothing we can do. You're going to owe tax, but
Right.
few and far between.
Yeah, I know. So in my industry, I'm in the telecom industry. And again, I came over from property management and got into this. I'm kind of a tech geek, so it always was a good fit for me to do both. My passion is in the whole association world, but I also, like I said, I'm a tech geek. So falling into this was a really good fit for me. But what's unique about this industry that I never really focused on until I got into it, most telecom companies, when you're bringing in bulk internet or bulk TV services or not as much phone, that's pretty rare nowadays. That kind of went the way of the 2 tin cans and a piece of string. With the bulk agreements in this industry, there's a thing called door fees, which is just a odd way to say signing bonus. So I know when we offer a signing bonus, there's 2 ways to do it. You can do a 1099 and they'll get a check, and that's basically income.
Yes.
Or they can, in lieu of that, there will be basically kind of comped months of free service for about the same amount of money. And different associations react differently to it, picking which one they want. But that's something I thought was unique, where an association is technically receiving income.
And it's actually good that you bring that up, because in my experience, it's a lot better for the association to get the comps months of service, because when they receive the check like that from the cable provider, that income does get taxed.
Yeah. So,
Yeah.
and the tax brackets that a nonprofit, and again, I'm just asking because I'm totally oblivious to this, but what are the tax brackets that an association would pay on, considering most associations don't really have much income?
Yes. So, and this is another complicating level for condominiums and HOAs, is they have an option. They can file one of 2 different forms. So they can file as a regular corporation. And at that, as a regular corporation, they pay 21%, a flat rate of 21%. As
Okay.
a condominium or HOA, they pay a flat rate of 30%. So you might think, why would we ever file as a condo or an HOA if we're paying 30% tax? The form's a lot easier. It's a lot simpler. It's 1 page versus 6 pages. It's typically cheaper to have it prepared. And if you owe 0 tax at the end of the day anyway, it doesn't really matter. So for our clients, if you don't owe tax, we'll prepare the simple short form for you. And for those that do, we'll prepare the longer form and get you that lower tax rate.
Now, can you toggle back and forth year to year between the 2?
Yes, you can.
Even though you're the same entity, you don't change the type of entity you are. You are just changing how you're filing that entity. And like you said, most don't have any.
Exactly.
A 1 page seems like a no-brainer.
Exactly. And it makes it easier for the board too, so they don't have to look them over and keep track of all the pages and where do I sign, that kind of thing. It's easier just to, here's your 1 page tax return, sign right there. It makes it simpler for the board to follow it as well.
Right. And then as far as your year, obviously tax season, you're busy. Audits, is that usually an end of year automatically? I mean, I know most have a calendar style budget as opposed to, a different month. What do you see out there? What would you say the percentage are that everybody's just going calendar year and keeping it simple versus switching it up to have a fiscal year of whatever, May to May or whatever it is?
I'd say at least 90% are calendar year end. So.
Okay. So then for audits, it's just year end. So your Q1 is probably busy with audits, I'm assuming?
Correct.
Yeah, we're with
Here's
our
a
audits.
question. What would
and
be the
tax prep.
benefit of not going with a calendar year, doing a fiscal where you're picking a different month during the year?
For associations, I'm not so sure that they're a
Okay.
great reason. It's typically to, if you have in your business cycle some reason for it. But if you are a seasonal business, I know back home in Minnesota, a lot of the associations up there that had marinas on the lakes and whatnot, a lot of them would go with October or September year ends because that's when everybody would pull their boats out of the lake and the lakes would freeze
Yeah.
over and they'd see changes in income and they'd have to do budgeting and that kind of stuff around
Sure.
that time period. Unless there's some seasonal aspect to your association or condo, there
Yeah.
isn't really a great reason I can think of.
No, that makes sense. So maybe if a place had a restaurant on site is where they're bringing in a decent amount of income from that, I could see where maybe, yeah, they would go with more of a fiscal over a calendar. Okay. Yeah, that makes sense. So one of the other things that I wanted to bring up to you guys, Tallahassee has been on quite a tear over the last 5 years, coming up with new statutes or tweaking old ones. What are some main changes you've seen over the last few years, and where do you see this going? Do you see any other changes coming?
I think what we're going to see just year in and year out, a little bit at a time, there's just going to be more regulation here, a little more there. Obviously, the CIRAs and the reserve funding requirement was the big one this year. But, there's always some little changes in there. I think in the past year, there's some bylaw changes where if you can't see the boat from the sidewalk, you can't tell people that they can't have it there. Just little things like that.
Right.
So one of the small ones that through this year in our industry is in the past, there was a requirement to have audits, reviews, and compilations done, depending on the level of revenue of your association. But membership could waive it every year if they wanted to. The new change is you can only waive it every other year.
Okay.
So it's now at a minimum every other year, your association will have to have audit, review, compilation. If you're small enough, you don't fall under the requirement, but those are for very small associations that would fall under that requirement.
Right. And the average cost of doing that, what would you say the average cost is for compilation versus a review versus full audit?
For us, I'd say the average cost of our full audit is probably around $4,000 to $4,500. The reviews are probably around $2,000. The compilation's probably right around $1,000.
Okay. And obviously that depends on size of the association, size of the budget, obviously. So yeah, but for peace of mind, that sure seems like a small price to pay when you're considering what is spent on line items like landscaping or I dare to say telecom, it's just, for peace of mind, this is definitely well worth it for sure. So where do you see it going in the future though, as far as any other changes that you feel are needed in the industry as far as you specifically? And then where do you see your firm going? What are your plans moving forward?
So as far as the financial reporting requirements for the state of Florida, I think that they're in a good spot with that requirement. Yeah. It's a very reasonable requirement. So for our firm, our plan for the future really is, just keep growing in Florida. We have our Southwest Florida office here in Bonita Springs. We have an office up on the Panhandle in Destin as well. And just keep building connections.
So what would you say the average size, and what's the average size association that is your client? What's your avatar for your client?
About 80 units.
Yeah, I'd say on average, but we have 15 unit clients. We have clients that are 900 units, anywhere in between. I'd say,
but that would be an average.
Yeah.
That's just like an average of what community associations would be, about 80 units.
Yeah.
And is it mostly managed communities or self-managed?
Yes. Most are managed.
Okay.
So yeah, we work with hundreds of property managers and board members. So.
Okay. And this is something that comes up, I think, in my discussions for sure. Managed, most associations are managed. Some self-managed, especially the smaller ones, and I get that. I'm always a little surprised when larger associations choose to be self-managed, because there are so many regulations, so many statutes, so many pitfalls that are just waiting for somebody to walk into.
And it's a lot of work. And it's a lot of work too, and you're not getting paid for it. So it's a lot of
Oh,
work. It's a lot of work.
exactly.
So board members.
Exactly. So when you are dealing with a self-managed association, are there things that they can do to make their job easier regarding finances? Or do you come across certain softwares that you find the self-managed ones use? Is it more of a QuickBooks, or are they hopefully not pulling out the old spreadsheet? I'm thinking that went the way of the dodo, but I mean, I love spreadsheets, don't get me wrong, but
Yeah.
what is something that a self-managed community can do to make their life easier, and obviously make your life easier if you're working with them?
So really, and you're correct, it's most self-managed properties just use QuickBooks. It isn't really ideal. There's a lot better accounting software out there for HOAs and condos. The only pitfall with that is it's usually a little more expensive, and it's meant more for management companies. And so that's one of the advantages if you go to a bookkeeping firm to do your books for you, and especially one that does a lot of HOAs and condos. They'll have that better software, and it's meant and designed and built around condos and HOAs. Not only that, but you no longer have to go and put everything into QuickBooks yourself. For self-managed
Right.
properties, I would 100% recommend getting a professional bookkeeping service to help them keep the books. For regulatory compliance, absolutely consult with your attorneys, your lawyers. If you are going to go self-managed as a board, don't try and do it on your own. Lean on and rely on the professionals. Get a good bookkeeper, good attorneys, good tax prep and audit firm. Just find people that you can rely on and that have expertise in the industry to help you go down that path of being self-managed.
What are some of the main accounting software systems that you see out there?
The two big ones that we run into a lot, they're Sync and Vantica, are those are probably the two biggest names out there for that software. They're both really good. They're a lot better than QuickBooks for condos and HOAs.
Yeah, it definitely wasn't built for associations with books, but not necessarily. I've had some dealings with back when I was in property management. Definitely solid company, solid software. I guess it's also how well you use it.
Yes.
It features, but unless you take the time to learn and you integrate and use it, that's really, I think, what it comes down to also. Now, is there anything that we have not covered that you want to talk about?
I'll just say that we also provide CEU courses for CAMs.
Nice.
Teach those CEUs right there and do like a lunch and learn
Nice.
for management companies. So yeah, if any managers out there hear this, yeah, give us a call.
What are the titles or the topics of the classes that you teach?
Pretty much what we're talking about right here with audits, reviews. Frank?
Yeah. A lot of times we'll go over how to read the financial statements for your association, how to explain stuff to your boards. We cover a little bit of tax stuff, a little bit of budget.
No, that's very valuable. I want to thank my guests today, Jeremy Mehrhoff and Frank Wright of Mehrhoff and Wright CPA firm. Always educational. Really appreciate your time. And if anybody has any questions, you guys are more than happy to reach out to me. I will put you in touch with these gentlemen, and hopefully they can help you out. So, all right. Thanks, guys. Appreciate it.